What's being detailed, and also what is a trap that most traders fall into, and it's made by design, folks. It's not something that you would understand and see unless you understand volume and understand how the market works in terms of volume profile, and having the proper knowledge and the proper indicators. Let me explain. Watch this level here. If you don't have any of the indicators, you would see earlier that the market stopped here a couple of times. Let's see if you noticed here and here, and you would say a breakout or a breakdown below this level. It's happening right now. So you take a short maybe after the breakout, just for you to get stuck at the bottom of the area. Hopefully you see it, and then the market goes against you to stop you out. Now, it's very common because most people don't pay attention to the details. Most traders don't pay attention to these details. Look at 987 tick chart. Same idea. If I take away the volume profile, even if you take away the indicators, you would see nothing but a breakout. Imagine you don't have these power lines or these lines to help you understand this, or the knowledge to help you understand this. Now, what happened here is you did not look at a bigger picture. Let's look at a 60-minute chart and understand this. And a 60-minute, that's the simplest chart you can refer to if you are trading small or trading small periods, or short periods. From the 60-minute chart, and from your understanding, basic understanding of what I've been explaining, or what I have been posting on the YouTube channel, is that these two power lines will create a support, and the volume profile area from here all the way to the bottom, it's gray. It's kind of a gray, so or not as bright blue as the below. So it means it's one level. So it means it's a continuation zone, and there's a blockage or a stop right here where the market could reverse it. You see the difference between volume profile. That's that alone tells you that, you know what, this is a trap. So a trap is when you have a bunch of traders trying to, let me rephrase that, a bunch of institutions. They want to take the market long. They want to go long, but they have, let's say, 10,000 contracts, 10K contracts, and they want to bring the market up. But if they go with 10,000 contracts, they will not be filled at price because there's not enough sellers on the other side. You understand that? There's not enough sellers on the selling. So this is buying, this is buying, for example, and this is selling. You have maybe 5K, not 10K. So what they would do, they will push the market lower using a lot of different visual, and some of them would be the breakdown or breakout setup that most traders follow randomly. Sometimes they will use the tape, or the bid and ask ladder for you to show you there's a lot of interest. So once you join that, just for you to get your contracts in. By now, once the setup set, you would have more than 10,000 contracts in from mostly novice traders, just for them to reverse the market to get their 10K in. 10,000 contracts, sorry, 10,000 contracts, 10K, 10 10K contracts in to get filled at a good price. Usually, if you trade without, if you go in long, for example, without having enough sellers on the other side, you will get filled, but you will get filled in different prices, maybe 10, 15, 20 ticks or pips slippage. So this is how they avoid that. So a trap is something that you need to be aware of. You need to take a look at the bigger picture, and this bigger picture for me starts from the daily. The daily, it tells me, yes, there is an interest for the resistance, for the market to come back up, and especially it's been coming down, or sorry, for the market to come back down. Especially it's been a downtrend since December of 2021. Now we are sitting in July, end of July 2022. So yes, but it's not in the long term. It could go back up. to test these two power lines, to test this level, to test this price. So you have to be aware of details before you get in a trade. Now, let's assume you are a short-term trader. Still, it applies the same. Look at 15 minutes, look at a 60 minutes. I explained earlier. Worst case scenario, if you're interested in getting into this trade, why not look for a retracement up and choose one of these levels, maybe if you want to scalp for a few ticks or pips here and there. Bottom line, don't get into a trap. Don't let the market makers dictate your entries. You have to anticipate the market ahead of time.